Exclusive analysis. In today's video, we're discussing Tesla and the consumer discretionary ETF and what it means for the overall market. Obviously, everyone's aware Tesla has reported earnings. Their earnings were missed, significant miss on the earnings. Not a positive call, in my opinion, from Elon Musk and the team. You've seen Tesla close all the way down at this 195.47 level in the post market. So on the daily chart, Tesla's already had a magnificent sell-off. It is one of the only Magnificent Seven caps not positive on the year, underneath the daily 200 moving average, significantly underperforming the market. So that is not typically in Tesla's character as a stock, but it is starting to see a tremendous amount of weakness, and it has done that for the last several weeks. Now, with Tesla's fall in the after hours, what does this mean? It's roughly down about just over 5% in the after hours off of their earnings call. You can see you're coming up into some support, but this is a big technical breakdown that is occurring on the Tesla chart. You can arguably say on the weekly chart, you have this little bit of a potential head and shoulders pattern, and you can simply draw it in like this. So what does this mean? If Tesla's triggering a potential head and shoulders, you can clearly see a massive break of this parallel support channel from your pivot low to your pivot, and a big technical breakdown. You arguably are going to close the week with a confirmed break of this channel, and that is not a healthy sign, because what does that mean? Well, that means a few things. That means you actually open up the probabilities for a potential move down to 86 bucks. Now, it may sound crazy, which that target does sound crazy. $86 price target on Tesla would imply roughly a 57% drop. Now, just hear me out here. Let me be clear. I will be trading Tesla in and out way before that. And this is just a possible scenario. It's not the probable scenario. It's just a possible scenario. When you trigger this weekly head and shoulders pattern, breaking the weekly 200 moving average, which is this turquoise moving average, it is just a possible scenario. It doesn't mean it's my base case. It doesn't mean I'm taking put options all the way down to 90 bucks, 88 bucks, even though that would be a bold call. It just means it's a scenario you have to look out for. There's certain things that could change that outlook if we firmed up in price action. But as of now, with this weekly candle close coming to an end and Tesla down 6%, it would have to take a significant reversal of over 6% to basically negate this technical breakdown at the moment. Certainly not out of the realm of possibilities for Tesla, but there's a lot of interesting things that we have to discuss. And Tesla triggering this weakness here, you will have some support basically in this 182, 181 range for a probable swing trade. But there is a scenario where I think Tesla can actually retrace all the way down to the mid to low 170s. And there's a weekly chart pattern. You can see if you throw in a Fibonacci retrace from your COVID low all the way to your COVID high, you can see that the big 618 retrace is all the way at 173 on the charts. That should be a massive technical support level where I think Tesla could actually retrace to, especially if the market, starts to lose. The fact that you got rejected off the 382 all the way up here, and you're piercing now through the 50% retrace. Next real stop is the 618 of this whole larger move. And then you take it one step further and you throw in another fib retrace tool all the way from this low pivot to this high pivot. You can clearly see there's two little 618 patterns, one at 178, one at 173. In and around that mid 170 level is likely where you're going to have a big support level and bounce. And what's interesting is even if you do on the daily chart a little bit of a measured move pattern. So if we take this recent sell-off here, I'm just going to remove this little fib level, but if you take this high pivot sell-off down to your low, that was roughly a 48% decline. If we move that over basically to this high pivot, to that high pivot, that's about a $95, $96 decline. It's a very similar move in terms of how many dollars sold. So you had about a $97 sell signal there, another $95 potential sell signal, and that would put us right into our 618, that 170 level, if we completed that move. So just definitely some factors stacking up here on the Tesla chart. And when we take it one step further, let's look at the XLY, so consumer discretionary. This ETF is dominated by Amazon and Tesla. And what's interesting about this ETF is if we take a look at the weekly chart, we actually got a golden cross. If I throw on this blue moving average is the 200 weekly. If I throw on the purple moving average, that is the weekly 50. MA. So when you take a look at this in a deeper perspective, you can clearly see you got a bullish crossover. It's called the golden cross on the weekly chart. Now, often a lot of people chase the golden cross, and that typically turns out to be a bad and negative thing. Right now, you're putting in a lowercase h pattern or a little bit of a weekly bear flag right at this support. But if you lose this support, which I think you do, you're going to have a nice potential fall. And Tesla being weak backs up this potential ETF having a failed breakout and likely seeing lower price action. But don't take my word for it. Let's look through the price history when we received the golden cross on the XLY ETF. Really, there's a couple scenarios where we actually had the golden cross, and we'll just have to zoom in on this and identify what transpired. So you can see here in 2010, we got the bullish crossover of the 50 and the 200 in an uptrend. But prior to leading to that, markets actually sold off 21% over about a 4-month period. So you had a big sell off in anticipation of that golden cross. And then the importance of the sell off and where we landed is if you throw on the EMA 113, which is in orange, okay, you checked back. The deepest point of support was all the way to the EMA 113. Okay, then we look, there's one more other scenario where we had that golden cross occur, which was basically right around this vicinity. And then you had a little bit of higher price action, but very, very distributive, choppy waters, and then a big sell off. And look what you hit, the EMA 113. So the big thing here that we have to really pay attention to is the fact that support looks to be found at the EMA 113. And if that is the similar case compared to the last two golden weekly cross scenarios, if we look at where weekly EMA 113 roughly is, you're right now trading at 160.23. That would align with my Tesla target of going lower, and that would also align with a big, probably a retrace of this 382 fib level. But this is a rising moving average, so it is inclining and sloping upwards, so expect this price target to adjust the longer this price action takes to retest support. Now, as long as you don't lose this key trend line here, sitting at around this low pivot of 171, you can have a chance of floating back up. But if you lose this 171 pivot, that EMA 113 is likely where price action wants to go. Hope this video analysis has helped you all. Definitely looking at some previous price pattern in history, going through the 3 golden cross moving averages on the XLY consumer discretionary ETF, and all 3 times, or the previous 2 times, have resulted in a check back to the EMA 113. Tesla being weak on the session is a huge component of this ETF, so therefore it supports further weakness in this particular sector. Thank you all for tuning in. Please give this video a big like down below if you found it extremely helpful.